Hi, so this is section 1.2, the credibility results. It just goes further into how to review results, okay? So, as I mentioned before, if you don't have a business yet, you can go to 2.2 to set it up first. Now, before applying for funding, again, banks and lenders evaluate how credible your business is, like on paper, right? So now, tier one, here are like the full like characteristics of tier one credibility. So the requirements are you have to meet all these requirements: 2+ years in business with the verifiable financials, of course, the EIN, all consistent addresses across all your important business docs. Here they are. And then the business address is a physical address, right? So it's not a virtual address or a PO box. Home addresses are fine because banks are starting to understand that there are many home based businesses uh, that do very well. Okay. So just no virtual or PO. And think virtual like iPostal, Regis, any of those co-op sharing places, right? You need a physical address. Oh, and if it is a brick and mortar location, like let's say you're renting out a space, you need to have like the lease agreement. So that's why even though iPostal technically like you're renting out the place, you don't necessarily have like a lease agreement, right? Like with the property owner, it's like a co-op. There's like multiple businesses that share that address. You get me? So that's why it can't be one of those places. It has to be a physical address, either home address or an actual like location that you're renting out. You have the lease agreement. No other businesses are like co-op in it, right? Anyways, have the business checking merchant processor or a payment processor, which I'll get into the differences in the bonuses. I explained the difference. It's yeah, anyways, we'll continue because this is mainly about the tiers. But my point is just have one of these two. So Stripe, QuickBooks, or Bank of America Merchant Service, whatever, right? Exception is when a business can still be a tier one. So these are exceptions to the rule. So let's say you have 2 years in business, but you don't have the Dun and Bradstreet number, then you must have the verifiable financials to qualify for tier one, okay? Who qualifies as tier one? Businesses that are 2+ years old with verifiable financials, even without the DMB. So that's really the key thing, right? 2 years in business and you got financials that can be verified. All right. Now you're not tier one if you meet these conditions. So business is over 2 years old, but no verifiables. You are then tier two. If a business is under 2 years old and you have the financials, you are tier two. Okay. So basically, this is saying under 2 years old, but you have like a year's worth, and then this is saying you're over 2 years old, but you don't have a single financial. Like, okay, and I know it might be a little crazy, but I've talked to business owners where like they haven't done their taxes in a few years, and that's very common, right? And there's tons of reasons why someone would do that. End of the day, you're gonna have to really work with the CPA and accountant that can look at those things for you. Okay, but my point is like that's what would drop you to a tier two. Next steps for tier one businesses: go to section 5 and start looking for banks and lenders. You really don't have to build business credit. You can if you want to, but again, you can just immediately start calling the banks. And the reason why, I'll get into the reason why a little bit later as well. But really, like the key, the secret to business funding is not only like having a strong personal credit profile, but like also the business itself. Like the more information you can provide on the business, such as like the financials, uh, the less risk it is for the bank, right? So that's why like that's tier one. You'd be considered tier one. Oh, and another thing, these tiers are like something that I created. Like the banks don't rank your business like this. This is just something that I did for myself to help. Uh, like when a new business owner comes in, I can like quickly categorize them and where they're at. Anyways, let's move. Let's continue. Tier two is partial credibility. You still you need some fixing, but you're still fundable. I feel comfortable funding businesses that are tier one and tier two, right? Anything less than that, I highly suggest you wait, right? Um, or consider using like personal credit cards to fund the business, right? But anyways, that's tier two. So you can still qualify, but your approvals and limits might be a little bit lower, right? You're not going to be able to max fund the business. But here are the characteristics, okay? Of course, it's registered. You have your registered business, name and address is all consistent. Business checking, you have the merchant processor or the payment processor, whatever, doesn't matter. And then the business is under 2 years old. So, exceptions, business agent financials exception. So, if a business is over 2 years old, but they don't have verifiable financials, as I mentioned above, tier two, right? Business is under 2 years old. And even if they have the financials, right? Because it's under 2 years old, tier two. Because tier one is 2+ years, right? Anyways, continue. If a business is between 1 to 2 years old, has no Duns and Bradstreet number, but they have the verifiable financials, you're tier two. Okay? Because again, you're under the 2 year mark. But you're doing everything right to hit the tier one mark with this right here. Okay? With this, you just got to start tracking your financials and etc. This one, you kind of have to wait, right? You kind of just have to wait until you're older than that. Now, if a business is 1 year old with the verifiables, again, you're tier two because you got to be 2+ years with verifiables to be a tier one. Remember that. Tier two is any one of these options here. Basically, the business is over 1 year old, but it's less than two, or in some cases, it's 2+ years old, but no financials to be that can be verified, right? Hope that makes sense. I hope I didn't over explain it, but again, just read it and really just take the time to understand. Now, who qualifies as tier two? As I mentioned, right? This is just kind of like reiterates what I said above and what I just said. So 1 to 2 years old, even with financials, because blenders prefer older businesses, right? More data, less risk. 2+ years old, but they're missing the financials, so tax returns, P&L, balance sheet, etc. Because again, that lowers the risk and gives them more data, right? You're not tier two. Even if business seems like it's a tier two, it's actually tier three under these conditions. So 6 months old. So if it's under 6 months, right, you're tier three or lower unless they qualified for like using personal credit cards for funding, etc. Right? If a business is between 6 months to 1 year old but has no verifiable financials and no revenue, tier three, right? So how to move up to tier one, easy hack it. So again, this is just quick ways to get up to tier one. So if a business is 2 years old but they're missing the financials, as I mentioned, you're gonna want to talk to the tax pros and figure out when it makes sense to start showing more income, more revenue, etc. How you can start structuring your business financials. Because again, not it doesn't make always make sense to start doing those things, but you need to start. Your CPA will explain all the rules. They'll tell you like you can do this, don't do this, or hey, I know you want to like take this deduction, but technically like you're breaking the law, right? So that's what I'm saying. You're gonna want to talk to a tax pro because there's cases where they'll just structure things for you. Okay. Now, if a business is 1 year old with the financials, just continue to do what you do. Maintain your financials until you hit 2 years in business, and you automatically qualify as tier one, right? Because yeah, there's some businesses they're 1 year old, right, and they're already tracking that stuff, and it just makes sense for them to do it. So then just keep doing what you're doing, and you'll be tier one. In this case, you might have to consult with your tax pro and just figure that out, the timing, right? So next steps are tier two. Go to section 4.2. You'll learn how to build business credit while you wait to become a tier one business. Make sure to maintain verifiables. Tier three. If you're a tier three, you can still qualify for funding. Usually it'll be in the form of business credit cards, right? Might be a little bit harder, and you might get less money than tier twos, but you can still get like the business credit cards. Okay. Many lenders require extended verification. That's the thing, right? They may request more information. Regardless, though, it's possible to fund, but you're gonna get grilled, right? Not in a bad way. They're just gonna really want to see who you are and what you're about, right? Tier three requirements. These are all requirements to be tier three. Legally registered, everything matches, have checking account, and then you're between 6 months to 1 year old. Tier three businesses do not have verifiables usually. They usually don't have the DMB, and they do not have consistent business revenue history. You know what I'm saying? So a lot of this is usually, again, not always the case, but generally these are the three main things, right? Who qualifies as tier three? Businesses that are 6 months to 1 year old with business banking account, no verifiables or revenue history, right? Businesses that are 2+ years old but missing the verifiables, because it lowers the risk for the lenders. Oh, okay. I need to edit this. So only read this. I'll edit this. Don't worry about it. Now, if you're not tier three if you meet any of these conditions. Under 6 months old, tier four. Use your like personal credit to get personal cards to fund the business, right? That's what I'm saying here. But business has no business checking, tier four. But business has a virtual address or mismatch addresses, tier four, right? How to move up. So if you're between 6 months to 1 year old, no financials, consider tracking business revenue, create the P&Ls, balance sheet, consider filing business taxes until your business is 2 years old with 1 year financials, right? So like consider doing those things. Again, talk to a tax pro. They'll let you know if it makes sense or not. But business also does not have a DMB register for one to boost credibility. Doing this will help you qualify for funding faster. So get the DMB. And again, I'm going to show you guys how to do all this, okay? Next steps for tier three businesses. Again, you can still apply for funding, but be prepared for a lot of denials, a lot of hassle. You're gonna want to focus on the business credit cards, okay? But again, I'll break it down later. Go to section 4.1 so that you can learn how to build business credit if you like, maintain financials, and consider using your personal credit to get personal cards for your business, like personal credit cards, right? If that's the case. Yeah, well, we'll get into the funding strategies later. Now, tier four is high risk. These are auto denials unless you fix. Um, and this is true across many lenders and banks, okay? So, this is tier four characteristics that trigger automatic denials. You're using a virtual address, PO box, mismatch addresses. You don't have the checking account, mismatched information across all your legal docs. Um, it's a brand new business under 6 months old. You'd be tier five actually. And really, this is true. This is only really true if a 6 month old company is like applying for like a business loan or line of credit, right? Um, there's cases where you may be able to get it, but generally it's because the business owner may already have a relationship with the bank. So if they start a new business, they can go to their previous lender or bank, and the bank will loan them money to a new business, right? But if you don't have a track record, generally it's going to be a lot of auto denials for those types of things. But the business cards, you'll be good. But anyways, kind of getting into the weeds of things. Now, no EIN, you have not legally registered a business, or you're in a restricted industry. So think firearms, alcohol, adult entertainment, tobacco, crypto, money services, credit repair, etc. Now, you may still qualify for business funding through alternative means, just most traditional banks and lenders auto deny. You can also consider using personal credit cards, right, to fund the business. Now, if a business is under 6 months old, focus on qualifying through your personal credit while building credibility. So, like getting the personal credit cards and also the business credit cards. Start tracking the revenue. Consider doing all the financial, like consider doing all the stuff to start tracking your financials. So that way, when your business is 2 years old, you'll have the 1 years of financials. If using the virtual, change the home or office address immediately. Again, no virtual. And I harp on this because there's so much like wrong information out there that's saying that you can get approved with a virtual address, and that is just not true. Okay, like I've been doing this for a long time. Do not use a virtual address. Okay. Um, And don't, yeah, so just don't do it. If no business checking, open one and start making deposits, create some revenue history, get a merchant or payment processor. If info is mismatched across the business docs, fix everything so it matches. And I'm going to show you guys how to fix all of this, okay? Doing this will help you qualify for funding faster. Next steps are tier four. Go to section 2.1, start fixing all these issues. If you believe you're tier one or higher, you can go to section 2.3 to read the 6 mistakes that kill business credibility. This turns, and then if you fix this stuff, you can, like I said, you can turn a tier four to a tier one business. Because I've seen people where it's like, wow, like you have, like everything's in place for you to be a tier one, but because of these 6 mistakes, or because of this one little thing, you're tier four, right? So again, I'll break that down later. Now, tier five, new business owner starting from scratch. You can actually get business credit cards if you're tier five. This is like it's a very specific strategy, but my point is tier five is not a bad thing. You just don't want to be tier four, right? But anyways, basically you're at the start of everything, right? You're gonna be at a clean slate. It's better to be at the honestly, I like new business owners. Like, yeah, like I may not be able to help them immediately, but it's like a clean slate. You can start building the right habits, really learning what does work versus what other people think works or what they're viewing on TikTok or YouTube. And it's not like, that's bad or anything. It's just that there's a lot of misinformation, right? So the fact is that if you're here right now, you're in a really good position. And if I'm wrong, I definitely call me out on it, right? Like if you feel like I'm leading you guys wrong, definitely tell me like, I'm not doing the best. So, but I'm highly confident in my guide, and that any new business owner that comes to this, they will benefit greatly, right? So basically, how to move up. Go to section 2.2 to structure the business properly, so that way you don't have these mistakes here. Start building the habits of like considering tracking like your financials. You don't have to get professional immediately, but start considering that, like start learning those things. If you have strong personal credit, you can use it to get personal credit cards or what they call startup funding, which is the business credit cards. And like I said, as we progress, I'll break down the funding, um, basically the funding options and things like that. Okay. So again, you just got to stay patient if you're in this like I started here. Everyone starts here actually. Everyone does. So you just got to be patient, right? Again, this isn't a guide on business success. It's on business funding, but so I'm not really going to get into the mindset or anything like that. Um, but yeah, you just got to do what you got to do. And then these are automatic denials no matter what you're in. So business not registered, virtual address, mismatch addresses, no bank account, no EIN, and then under 6 months old. But there's cases where not always, right? It just depends on what you're applying for, really. If any of these apply in section 2.1, I show you how to fix. Your goal is to answer yes to basically every question, right? Obviously, except for the mismatch address part. So again, if you forget the questionnaire, just go here and you'll see what I mean, right? Oh, um, but yeah, I'll walk you through in section 2.1 so I can show you how to fix everything. So let's go there now.